Hey guys, how's it going? Value Venture Investing here today. So today we're going to be looking at Apple's Q3 2019 earnings. So they were actually pretty good. Not a significant quarter, not as significant as some other quarters. However, analysts were looking at this to see if there was some growth that there was going to be happening after some of the disastrous quarters that we've seen before. So taking a look at the stock right now, it's up, almost, 4.5% as of recording this, over $9 a share. So a nice little pop for, a quarter that wasn't particularly important. So let's have a quick video today and go over the numbers. There's some good, there's some bad, mainly good, and the stock is responding pretty good. So revenue, if you haven't already heard, was $53.8 billion in 3 months. Remember that too, right? And now that was versus $53.35 billion. So that's a pretty significant beat right there in revenue. So shows that they're generating more revenue. Of course, the good thing that people are always looking at is EPS. EPS was $2.18. The estimate was $2.10, but also keep in mind that Apple's been buying back shares. However, some of their faster growing segments like services, even wearables, have very high margins. So that's the reason why we're seeing that as well. Now looking at the different areas, iPhone, Mac, iPad, wearables, and services. Now they don't give unit numbers anymore, but we were going to expect that the iPhone was going to be down a bit. It was 25.99, about almost 26 billion dollars in revenue. Now the estimate was 26.54, so that was a miss. That was one of the few misses that they had, although that's something that's going to be expected as Apple transitions more into a services company. So that was down 12% year over year. So if there was something bad to take out of this earnings report, that would be that. Now I talked to you about Mac last quarter that we had here. They've been really doing a lot of updates to Mac, which I love. It's great that they've actually been updating them and not neglecting the Macs. So Mac revenue was $5.82 billion. Year over year, a year ago it was $5.3 billion. So significant growth in the Mac as well. That was something that people thought was dead, potentially, but it's looking as though it's doing very well. Now, iPad revenue, this is once the darling of Apple, and it, when the stock was falling back, I don't know when this was, I think back in 2016 or something like that, it was falling back and people are saying, well, their higher margin businesses are faltering, so Apple's in for bad times. Well, the iPad's been doing very well lately. $5.02 billion in year over year, that was $4.63 billion. I talked a little bit about this in my last video, why their Macs or their iPads are so incredibly strong. They're the best ones on the market. And we're seeing some growth in there. Wearables, my two favorite categories. I might as well even just go like this with them because these are the two that matter. These are the two that are going to drive the company in the future. Wearables revenue, $5.53 billion, and a year ago it was $3.7 billion. Now I was making videos like a year ago and I was saying how incredible this growth was. Look at this. Services revenue was hit at an all-time high of $11.46 billion. They're saying $11.5 billion. Last year it was $10.2 billion. Amazing numbers, but if there was something to take out of the presentation that was bad, the estimate was 11.88. So a slight miss on the services side, but still phenomenal growth. And this is what we're going to see really continue to go up, especially when we see some of the other services that are coming out in the future. Another thing to note about wearables is that it topped the iPad revenue for the first time. So it's kind of funny. I've said this before, how one product category, they start migrating into another one. It used to be the iPod, and then went to the iPad, then iPod to iPhone, and then the iPad. So there's always these transitioning times with Apple. So that's something significant to note. So let's take a quick look at the financials that they provided and go over a couple quick things to look at here. So looking at the consolidated statement of operations, so we saw net sales in terms of products, that's where we saw it go down a little bit. It was a little over 43, well actually almost 40, a little over $43 billion a year ago. Now it's only 42. However, you see services just grow phenomenal down below. And we can see how that affected operating income, down slightly to $11.54 billion. And then net income is actually slightly down as well at about $10 billion. A year ago, it was roughly 11.5 billion, but not significant. And then when you look at the earnings per share down below, as I said, we have basic and diluted. You usually want to look at diluted. There it is, that 218, and it was 234 a year ago. Now, net sales by a reportable segment. Now, we saw growth in Americas, which I specified on the last quarter. There was growth as well, so it's nice to see that. Europe was also a tough one last quarter. It's not too much different. I mean, it was 12.1 billion last year. Now it's almost 12 billion. Greater China, we've seen significant issues in Greater China. So we've seen it fall from 9.5 billion to 9.1 billion, but that's something we've talked about before. That's where there's a lot of stuff going on, a lot of geopolitical issues, bad blood with Apple in America, and stuff like that. Japan saw growth, and the rest of Asia Pacific saw growth as well. So, in totality, we saw actually, the sales increase 53.8 billion versus 53.2 billion. Now, looking at by category, we've already went over these, but it's kind of nice to see the way that they put it here, and they've totaled them at the bottom, and we can see each significant category that's grown or faltered. Yeah, the iPhone fell from 29 billion to 25 billion. Now that's to be expected. The Mac was significantly up. The iPad was significantly up. And look at that growth again in wearables and in services. Now, if you're wondering why the stock is doing so well after hours with, kind of marginal performance in some areas, a lot of it has to do with guidance and a lot of it has to do with China. Specifically on the conference call, they talk about Greater China is getting better. Actually, they're saying it's returning to growth. So even in these challenging economic times with this geopolitical risk, we're seeing growth in Greater China as well, and they're very bullish on China. So that's one reason. Services is a higher margin business than what they're generally in. And if you want to assign a multiple to a company, like a PE ratio or something like that, I think a services company in most cases has a higher multiple. So they're up for a higher stock price. And services now is over 20% of the revenue. So just talking about that migration, to the iPhone, to the iPad, to the services, the next one come out. Services is the next growth driver for Apple. The biggest reason, in my opinion, that the stock is responding positively to this is the guidance that they provided. So let's take a look at what they actually wrote on their website here. So they're saying revenue between 61 billion and 64 billion. So this is for the fourth quarter. So this is the next quarter coming up. Now, analysts were only expecting about $61 billion. So analysts were expecting on the low end of revenue. And whenever you ever see that kind of range and the analysts are on the low end, that's going to be inferred as something very positive, and indeed it is something very positive. Something that's also very important with Apple is their gross margin, and they're anticipating it will be between 37.5% and 38.5%. Now, the analyst estimate was about 37.7, so almost at the bottom line there again. So again, that's why we're seeing the analysts were much more bearish than Apple's own guidance, and Apple's own guidance is usually quite subdued, and they don't like to overdo it, so they're usually on the low end. Other income, we're not really too concerned with that, and the tax rate. Apple board of directors have declared a cash dividend of 77 cents a share on the common stock as well. So overall, I think it was a great quarter for Apple. It's not an extremely important quarter like, say, a holiday quarter or something like that. Tim Cook did hint that there were some other great products coming, and they're coming soon, so I'm going to be very interested to see that. But overall, I mean, there's nothing bad in this report, and the company is just getting stronger and stronger. My biggest position, I'm pretty happy. So that's going to be it for today, guys, and I'll see you in the next one.